Hello everyone and welcome to Forte's webinar. My name is Ariola and I will be your host for today. This webinar will be regarding OPEC and Non OPEC meeting that will be held in 24th of July. So before we start with this webinar, I would like you all to read the risk disclaimer. And then let's continue on what is important and what are we going to discuss in this webinar. So first of all, why this anticipated meeting of OPEC and non-OPEC countries, and by non-OPEC mostly we mean Russia, is so important in 24th July. We'll discuss about the historical production cut deal and the unkeep of it, the biggest oil producer in the world and the return of U.S. shale producers, weekly oil-related reports in the economic calendar and their importance. This is very important part because also they bring huge volatility in crude oil prices, and OPEC decision to cut the production, what happened and what can happen furthermore. We also recently faced some Qatar issues. We'll speak about those, what happened and how was that interpreted by the markets, and the current situation regarding production and deduction deal. So let's go first and have a view what happened before the historical production cut deal and the unkeep of it. So after more than 2 years of depressed oil prices, which have more than held since 2014 due to a supply glut on the market, OPEC and non-OPEC producers reached in November last year their first deal since 2001, which also it was actually a jointly output and is a global glut. OPEC agreed to slash output by 1.2 million barrels per day from 1st January of 2017, with top exporters like Saudi Arabia cutting as much as 486,000 per day and Russia to cut around 300,000. With the deal finally signed after almost a year of arguing within the Organization of Petroleum Exporting Countries, the mistrust in willingness of non-OPEC Russia to play ball, market focus switched to compliance with the agreement. Since then, up to the 10th of 2016, OPEC production and the election of the energy-friendly administration in the United States supported gains in crude oil. After the meeting of 25th of May, OPEC extended their quotas until the end of the first quarter of 2018. Yet the market was disappointed that there were no further cuts, and the oil prices fell again below $50 per barrel to the lowest of this year in June. 21st of June at the price level $42.05 on the active month of New York exchange rate. And this was shown in the contract of August. So since the 21st of June, crude oil prices started to rebound back. So this is a short review. We had the cuts of 2016 in 30th of November, which we saw a huge uptrend on crude oil since that, and then again troubles regarding non-holding this OPEC deal. So let's take a look at the chart. This is the chart of crude oil prices starting from September of 2015, and this is exactly December. The deal was held in the end of November. So from that moment, oil started to increase up to 56.5 after the deal, and then markets were anticipating further more cuts, but OPEC kind of disappointed. So we had again a downtrend. America came back to the oil producer, but we'll speak about this later on. But to have a better view, we want to see what really each country produces, right? How much each one of them produces. What are the main actors? So we have the leader OPEC with 32 million point 550,000 barrels per day. The whole OPEC countries with the leading exporter, of course, Saudi Arabia. And after that, we have Russia with 10 million 10.95 million per day, barrels per day. After that, it's United States, and so it's China and Canada. So that's why when there is a deal between the OPEC and non-OPEC country, mostly anticipated by Russia is it is part of this cut. And this is why it's very important, and this is why it can bring huge volatility due to what is going to happen. We have to see what is going to happen. So let's go and check now why America came back with US shale production after the price arrived at 50. One of the most significant factors that investors need to know to remember about the developments in crude oil sector over the past few years in the technical advantages when it comes to United States shale production, because that has blessed America with a call option on energy independence. The fact that producer can quickly turn on and off the wells in response to price increases and decreases means that US has become much less independent on Middle East oil during the periods of high prices and political turmoil in the region that can affect production and logistics. The US is now in many ways the swing producer of oil in the world. And as prices moved above the $50 per barrel, shale output in the United States increased and hedging activity grew as the producer locked in future prices above production cost levels. Factors that push U.S. shale oil production. Well, crude oil production in the United States rose quickly as the price moved to the $50 per barrel. They have a lot of technological improvements, such as horizontal drilling. Actually, this is just technical, and fracking have given producer the ability to turn off and turn on quickly to the response of price changes. And they have now, under Trump regulation, under the Trump administration, fewer regulations. So since Trump came to the government, he disconnected America from this environmental tractate. So now they have few regulation which can bring them to much higher producing over the next months. And according to the recent report from Energy Information Administration, USA production could rise to above the 10 million barrel per day per day in 2018, making the US competitor with Saudis and Russians for the world's leading oil producer. So that's why OPEC and non-OPEC countries, sometimes they agree, sometimes they don't agree to cut oil production. Furthermore, if there is any question, you have the chat part in here. You can follow us live in the chat. Meanwhile, that I'm explaining something, if you want to interfere, to ask something, I will answer to all your questions. So let's go back to the presentation. And in this chart, we will see now the correlation between U.S. production and OPEC production, and where was the price. So this is the price of crude oil. The green line is the price of crude oil. and the white one shows the production on United States, and this shows the production of OPEC countries. So when the price of crude oil reached the level around above $56 per barrel, we see that United States production started to increase. Meanwhile, that was since November of last year, we see that production of OPEC has been decreasing. Now, we have in here more oil production from America than from OPEC countries. Okay, so this is a chart that can also help us. Now America is increasing the production slowly, also OPEC, and we see that the price is going down. But what is as well very, very important is that we need to know what moves the oil prices in the short term and actually weekly level, and how we can monitor it. So all of you actually may have seen the economic calendar. You have over there weekly reports, and the very important ones are Baker Hughes US oil rig counts. This is a report that is published each Friday, usually at 6 p.m. UK time. And over there you will see how many new rigs were counted for this week, because this will show us a possible increase on oil production coming from United States in the future. Okay, and afterwards we have US crude oil inventories. This is a report that comes actually every Wednesday. Usually it's on Wednesday, but if there is some celebration during the week, it can be postponed by one day. Let's say if the celebration was on Sunday, or if it was on Monday, this can be postponed one day. So these crude oil inventories are the official ones that are coming on Wednesday. Usually is around 3:30 p.m. UK time, and they have the tendency to bring huge volatility in oil prices. So it's very, very important. It's very important for each trader that likes to trade with crude oil in short term to follow up these reports all the time. So we will see another crude oil price correlated with the number of Baker Hughes coming from America. So we see that Baker Hughes has been reporting a lot of oil counts, and only recently a bit downtrend, but still it's reporting a huge uptrend. So we need to follow this part. And why US inventories are so important? Well, as we said, after oil breached the level of $50 per barrel, we saw that America started to produce even more. And you see in here, we could see that since the time oil prices breached the level, went below 50 and are staying still there. According to the U.S. Energy Information Administration, U.S. crude oil inventories fell with 7.6 million barrels last week, its biggest weekly plunge in 10 months. So now that oil prices are again below 50, U.S. crude oil U.S. production is also decreasing, and US crude oil inventories are in the upper half of the average range for this time of the year. So another we see now the correlation of the price of crude oil prices coming from United States, but we want to see also the US correlated with Organization for Economic Cooperation and Development. Maybe everyone knows that most of the reports are coming from biggest report conductors like Morgan Stanley. Estimates that the crude oil and the product of inventories rose in the second quarter by actually 1 million, and from some other non-OPEC countries, and the high production from US actually brought the real pressure on oil prices. And of course, on 25th of May, we had the scheduled the regular meeting of OPEC countries, and as well we know that we had also Russia was invited on that meeting, and this meeting, most of investors were waiting and anticipating for another signal or another hawkish speech coming from OPEC for a possible reduction on crude oil, even furthermore than what already is. And in this meeting, they only spoke that they are going to extend the period of this production cut, but they are not going to cut even more. So OPEC extended their production cut on 25th May. The Saudis will be selling at least 5% of Aramco via an IPO, and stable oil prices around $50 per barrel will enhance the valuation of the initial public offering for those shares. The Saudi royal family is anxious to diversify some of the nation risk away from the petroleum revenues, and they will use the procedure for the IPO to fund a sovereign wealth fund that will invest in other business around the world. The three dominant oil producers in the world are Saudis, Russians, and the United States. And it is in their best interest for all of these three nations for the oil to remain above $50 per barrel. At this price, the Russian will receive a stable revenue flow, the US shale production can flourish, and the Saudis can cash in their crown jewel, Aramco. So this is why it benefits all of them to have this oil prices above 50. Nevertheless, oil production, the huge gap between demand and supply, it's still keeping oil prices really, really low. But we also have another problem that is coming. We most probably everybody heard about Qatar issue. The Qatar issue. In the aftermath of the OPEC meeting and the following a ceremonial visit from the United States President Donald Trump to Saudi Arabia, the Saudis and their allies in the region imposed an air, sea, and land blockage on Qatar. Qatar is the richest per capita nation in the Middle East, given a population of around 2 million and significant oil and gas production. It is located in the Persian Gulf, strategically across from Iran, and shares border with many of the countries that have severed diplomatic relationship with nations. Qatar had become too close with Iranians, in the opinion of Saudis and their allies. And at the same time, Al Jazeera broadcasted from Doha, Qatar, and the network has been critical for the KSA. The Qataris have also founded some of the terrorist groups in the Middle East, leading to the blockage, which continued at the end of second quarter. To complicate matters, the largest U.S. military base in the Middle East is in Qatar, which is central command for posts for this region. Nevertheless, diplomatic talks are underway to defuse the situation, but it seems like the main goal of the blockage has been to punish Qatar for its relationship with the theocracy in Iran. Middle East politics are like a complicated chess game. When the Saudis announced the blockage, the price of oil moved to the current production cuts. However, as diplomacy has taken a harsh rhetoric, at the end of June, the price of oil edged higher in hopes of a diplomatic solution to the crisis. So we saw that it could be interpreted as a strategy from Saudis to kind of block Qatar and cash in some furthermore higher prices from crude oil. Nevertheless, it backed down. So we it was interpreted actually as maybe the end of some deal coming from OPEC countries. So it was not such a good strategy. But let's go back from today and what is expected to happen from this meeting. Now, usually the recommendation is to wait for the day. Huge volatility is to be expected, but we can speak for some possible scenarios. So we have OPEC countries that have already implemented cuts. Some of the member, like Libya and Nigeria, are not in this deal yet, but we have Iran has achieved a compliance rate of only 55% this year, and also Venezuela has been relevant with its expectation. Meanwhile, two OPEC members not included in the deal are maybe will attend this meeting. Libya said that is ready to go also in this meeting. Nigeria has already announced that the lifting of force major of forecast export, potentially making available to the market more than 200 barrels per day. So they are willing to increase their production, but up to the optimal level that they were before, not less, not more, sorry. So in this meeting we want to see that OPEC and non-OPEC countries will come to the deal. We come to the deal that not only they will keep the previous deal as promised, but they will slightly decrease the production furthermore. So it is very important that in this deal to be specified what can be the cut and till when it can be the cut. Just remember back on 13th of November what happened, and I would like to show you in the platform. Since the announcing of this cut, where did the oil prices go? So this is why we made a huge historical part of crude oil, so everybody could see what is the preferable price from main producer, and we would like to see oil in here. So somewhere in here it was announced that they would like to start a cut in production. It's just the fact that they will hold this meeting, we see a reverse on oil prices from this level up to 47. Now I'd like to check all your questions. Is there any question? Okay, then if there is no question, I'd like to thank you, all of you, for attending this webinar. I really hope that you take advantage of this market news. As we said, high volatility is expected to happen. We will see we'll see exactly what is expected, to what they are going to say actually. And okay, we have a question. Crude oil has been very volatile lately. Yes, that's true. We showed it on the platform. So we have this huge volatility since this meeting was announced. I'm trying. Okay, so okay, just everybody that is willing to trade within this time, be very careful, wait for the pure signals, and then with whatever amount of money that you would like to deposit and trade with, you have to make sure that you are waiting for the final announcement and use all the alternative scenarios. Thank you, everybody, and we will hear each other in the next webinars. Cheers.